Hey guys, my name is Adam from Dodjit.com and this is your video briefing for Monday the 14th of September 2009. Alright, well, what a comeback we had last week. Look at this, 1, 2, 3, 4, 5, 6 days. Already on the Friday before last we started to turn around and we just climbed higher. Now, Friday's session we did present a small doji-like candlestick, and I think basically what's going to happen is we're going to receive a slight correction, especially we've got no economic data coming out today, so there's really nothing to drive the markets higher. We have formed a higher high. We can see here one high. Let's just plot that on the chart for you. One here, and we can see a lower high which is roughly around here. We just broke up above that prior high, so things do look like they are at the moment still positive. We've got this trend line support around here. I think that we're going to receive a correction. Now take into consideration that if we do receive a correction, this would be an ideal area. We can see that the two lines coincide, and in addition we've got a lot of support around this area, around all of these doji candlesticks. So we've got that. Now in addition, if you just take a look at the chart, we've got minor divergence. Let's just plot this right here. We've got minor divergence right around here. We can see that as the trend is presenting us with new highs, we are receiving lower highs on our MACD. Take that into consideration. There's nothing to panic about, I don't think, at this stage. I don't think there's anything really to pull down the markets. Economic data is coming out better and better as time goes on. I think we're going to receive a slight correction, and one of the things that are backing this up is the VIX. Now check this out, we brought up the VIX. Now we don't normally speak about the VIX, we don't also normally bring this chart up on the weekly video analysis, and what it basically is, it's a type of measurement that really takes into consideration the market's fear, what's going on in the markets. It derives from a calculation according to implied volatility from options. So basically what it means normally is that if the VIX is climbing higher, it's becoming really high like we saw here, it normally means that there's panic in the market. If it's low like around here, so normally we're in a nice bullish market. So as you can see at the moment, we've dropped down. Now we've touched our 200 weekly moving average, and we can see that each time we touch that, also around here, we had a lot of congestion around this area, around the 200-day moving average. Each time we bounce slightly higher. So I'm not saying that we're now entering a bearish market. I'm just saying take this into consideration. We've got our trend line coming down like that. We've broken it. We could receive a slight pullback. Again, what we're looking at, and this is something that we've been looking at for quite a while, every pullback is just an opportunity to get into the markets to go higher. That's what we still feel at the moment. And basically how we're playing it is we're just each time looking for stocks that have presented a nice rally over the last couple of months, and basically just getting battered each time that the market pulls back. They present a nice pullback, and then it's just giving us a really nice entry point. On various currency pairs we're doing the same type of thing, or we're using breakouts. We publish most of the breakouts also on the website. Now what I've just done is I've flipped over to a daily chart on the VIX, and this again is just giving us more confirmation that we could receive a slight correction. Look at this, we've received a type of hammer candlestick around prior support. So, you know, keep an eye out on that. Don't expect anything major, at least not at the moment. The trend is still going higher. As always, I like to finish off with a couple of currency pairs to get you all updated. What I've done this time around, I'm starting with the New Zealand dollar against the US dollar. We can see that the trend is still intact. We are climbing higher, there's no doubt about it. We're receiving this correction, and a correction is perfectly acceptable, especially after 1, 2, 3, 4, 5, 6, 7 days of trading higher. We're going to probably receive a correction maybe to roughly the same type of trading pattern as the S&P 500. We can see that the two lines coincide. So, you know, if you're looking to take this short, don't know if it's such a good idea unless you're trading the intraday sessions. We can see the MACD is also starting to cross over a little bit. all signs of a correction. I think also, you know, we're receiving, and this video is being done during morning hours, Europe morning hours. So, you know, if we're already receiving a pullback on various different currency pairs, I think it's going to indicate that we might receive a negative open in the US. Obviously, we're going to have to see how the futures play out. The next chart that I've brought up is the pound against the US dollar. A lovely turnaround here. Look at this. We broke our trend line going lower. We are now climbing higher, but take into consideration this level around here. Now we're receiving at the moment a type of pattern that's called an evening star. We've got this bullish candle, this doji-like candlestick around resistance, and we are receiving a negative confirmation candle around here, which basically means that if we're not going to break higher above this resistance level 16663 today, so then take into consideration we've got this minor range roughly around here, this level right here, and then we've got support number 2 roughly around here. So, you know, if you're thinking of trading the pound against the dollar, take into consideration resistance, support. You can play off that. We've done that in the past. Now the final chart that I want to show you guys is slightly different. It's the euro against the pound, and normally we don't really trade this chart, and I don't know, I'm not really that fond of this chart, but it does look like it's starting to set up. Could turn out to be something interesting. Check this out. We've got our trend line, our major trend line coming down like, let's just plot that like that. We can see that the trend is going lower, meaning our major trend is going lower. We've got here now resistance around our trend line once, twice. So take that into consideration. We got our secondary trend going higher like that. So we've got this consolidation around roughly around here now. At the moment we've got our 2 consolidation lines. Let's just plot that around here. We can see support 1, 2, 3 around here, 4 around here. So we've got this really tight range at the moment. So this does look like it's going to break out. We've got the MACD, it's really starting to converge together. I mean that the moving averages are really starting to trade around one another. So look for a break around this area. You've got the 2 levels. I would personally use support and resistance as your entry points. I'm talking about below support, below resistance. I wouldn't really use the trend lines here, at least, because we can see that the trend lines are pretty close to the support and resistance levels. This should be a nice trade. Let's keep a close eye on this. In the meantime, you can work off support, work off resistance. My name is Adam from Dodjit.com.